Welcome to T.S. Lombard. Chair Yellen's pursuit of 2% inflation, her white whale, so to speak, continues. In her recent press conference, she talked about trying to get inflation and wanting to get inflation and managing Fed policy to get inflation up to 2%, yet at the same time, the inflation rate continues to fall. Undeterred, she's raising rates, and she promises to raise rates another 25 basis points sometime later this year to around 1.5%. At the same time, in the interest of normalizing policy, she's beginning to outline the details, or she did outline the details, for reducing the Fed balance sheet. And our expectation is that she will put that in place in September, and she will raise interest rates to 1.5% come December. Now, what's our view on inflation? Well, we think the disinflation numbers that we're seeing right now are not really that surprising, considering that inflation and wage growth generally runs with a 12 to 18-month lag with actual economic activity. In other words, what we're seeing today is an echo of what happened to last year's economy and the slow growth that we had then. Where does that put inflation and the course of Fed policy going forward? Essentially, if there is going to be an inflation in wages and prices, it's going to be a 2018 event. And before we get inflation, we are at least going to begin to see an end to the disinflation that we currently see in the data. And our expectation is that as 2017 rolls forward, we will begin to see inflation rates stabilize, and next year stable in the beginning, and then probably start to see a bit of an uptick next year, aided and abetted by a likely set of tax cuts of some size, either later this year or more likely the beginning of next year.